Welcome to the Trump Breaking News Network, your daily source for up-to-the-minute Trump news. Join us today and every day. Here's today's news.
This is TBNN.
Global market cap hits $50 trillion for the first time ever as all eyes turn to Trump tax plan. By Tyler Durden. After 2 days of back-to-back triple-digit gains in the Dow for the first time since the election, overnight the torrid rally has faded, with European shares and U.S. stock futures little changed ahead of Trump's big unveil of his much-anticipated tax cut plan as investors seek new impetus for a flagging relief rally. And, if as some traders expect, the rally is likely to be reignited no matter what Trump announces today, although a less hyperbolic plan may in fact be more favorable for risk, as it makes Trump's plan more likely instead of being shot down by Congress. Despite the tapering of euphoria, world stocks hit another all-time high on the back of strong earnings and the realization that whatever Trump says, the S&P, less than 1% from all-time highs, will likely hit a new record. The MSCI World Equity Index, which tracks shares in 46 countries, was up 0.1% to a fresh record high. It is up nearly 2% this week and 8.35% since the start of the year. As Bloomberg's David Ingles charts, the market cap of all stocks in the index, and thus the world, has just surpassed $50 trillion for the first time ever. On top of the French election result, we have had a very decent set of corporate earnings in the U.S. and that helped push the market further along the same direction, said Investec economist Philip Shaw. I am unsure how further along we really are on the tax-cutting agenda, but it is certainly not doing market sentiment any harm, he added. Further details on President Trump's tax-cutting plans are expected to be announced later on Wednesday, potentially reviving reflation bets. The threat of a U.S. government shutdown this weekend also receded after Trump backed away from demanding Congress include funding for his planned border wall with Mexico in a spending bill. The dollar rebounded modestly for a second day after plunging in the past week to lows not seen since November, gaining against most Group of 10 currencies even as the WTI slide continues, with crude languishing below $50 a barrel after a report on U.S. supplies. European stocks halted a 5-day advance that had taken them to the highest since 2015 as earnings painted a mixed picture on growth. According to Bloomberg, investors are waiting to see if Trump's conciliatory tone on the border wall could help avert a government shutdown even as most members of the Congress are in the dark about the $1.1 trillion spending bill. Policy reviews by the Japanese and European Central Bank may also set the tone for rest of the week. European shares pulled back slightly from 20-month highs as some disappointing corporate results weighed on the market but Asian stocks powered ahead. The Stoxx Europe 600 index was little changed, after a 5-day rally to the highest since August 2015. Japan's Topix index rose 1.2%, climbing for a fifth straight day for the longest winning streak this year. Futures on the S&P 500 index were flat after the underlying gauge climbed 0.6% on Tuesday, to within 10 points of its closing record. The early FX price action this morning has been in the year, as the market has faded the story out late yesterday that the ECB are considering signaling a tweak in their monetary policy stance in the wake of the Macron first-round victory at the weekend. This sounds premature to say the least, and alongside this, we have seen Draghi and co curbing some of the hawkish sentiment in response to their last meeting. The recovery EU-wide is a little better than fragile, but as the Fed have been struggling to do in their communication to the market, the ECB now face a similar task. The slew of positive news pushed the Nasdaq Composite to a record high on Tuesday while the Dow and S&P 500 brushed against recent peaks. Against a strengthening dollar, the euro held on to the bulk of the gains made earlier this week. It fell 0.13% to $1.0911, but is still up 1.72% from Friday's close. U.S. Treasury yields, meanwhile, rose above 2.30% for the first time in 2 weeks. U.S. bond yields have broken higher without the support of commodity prices, which is one of the clearest signs that the Trump trade is back, Morgan Stanley analysts said in a note. Eurozone government bond yields nudged up ahead of Trump's keenly anticipated tax announcement. Oil prices resumed their downward trend on Wednesday as data showed a rise in U.S. crude inventories and record supplies in the rest of the world cast doubt on OPEC's ability to cut supplies and tighten the market. Economic data include a revision of retail sales. Procter & Gamble, PepsiCo are among companies scheduled to publish results. Alphabet, Microsoft, Amazon.com, Twitter, Intel, Barclays, Bayer AG and Totalsa are among major companies releasing results later this week. The Bank of Japan is widely expected to keep the settings on its monetary easing program unchanged at the end of a two-day policy meeting on Thursday. Though inflation remains well below the central bank's 2% target, it's ticking up. The ECB sets monetary policy later that same day. With officials indicating little chance of a policy change, the focus will be on any signals from President Mario Draghi that the central bank is debating an exit from its extraordinary stimulus. Market snapshot. S&P 500 futures down less than 0.1% to 2,384.00. Stoxx Europe 600 unchanged at 386.90. MXAP up 0.5% to 149.55. MXAP up 0.3% to 487.86. Nikkei up 1.1% to 19,289.43. Topix up 1.2% to 1,537.41. Hang Seng Index up 0.5% to 24,578.43. Shanghai Composite up 0.2% to 3,140.85. Sensex up 0.7% to 30,149.50. Australia S&P ASX 200 up 0.7% to 5,912.04. Kospi up 0.5% to 2,207.84. German 10-year yield fell 1.0 bits per second to 0.368%. Euro down 0.2% to 1.0910 per US dollar. Brent futures down 0.04% to $52.08/barrel. Italian 10-year yield rose 8.4 bits per second to 1.972%. Spanish 10-year yield rose 1.1 bits per second to 1.686%. Gold spot up 0.1% to $1,265.84. US dollar index up 0.2% to 98.98. Top headline news from Bloomberg. President Donald Trump's expected call to slash the corporate tax rate to 15%, a number that many economists say would boost the deficit so much that the cut would be short-lived, may be less about policy and more about deal-making. The rollout of legislation this week that would rip up much of the Dodd-Frank Act marks a pivotal moment for Republicans' efforts to overhaul post-crisis financial rules. Credit Suisse Chief Executive Officer Tidjane Thiam is bowing to investor pressure to keep the bank's biggest profit generator and instead will bolster capital by selling stock in a rights offer. KKR & Company offered to buy a controlling stake in Hitachi Kokusai Electric Incorporated, the chip system-making unit of Hitachi Limited, in a bid that values the target at $2.3 billion. BHP Billiton Limited said it may resurrect the sale of its underperforming Fayetteville shale gas assets in Arkansas a little more than 2 weeks after billionaire Paul Singer proposed spinning off the mining company's U.S. petroleum division. China Southern Airlines Company said it plans to buy 20 wide-body aircraft from Airbus SE in a deal worth about $6 billion, according to a filing to the Hong Kong Stock Exchange Wednesday. KKR to acquire Hitachi Kokusai in deal valued at $2.3 billion. iQIYI, Netflix reach content cooperation agreement. Uber to question Alphabet's Larry Page in Robocar case. Bayer Monsanto deal needs EU scrutiny, NRW minister tells RP. Shanghai to develop water town next to Disneyland, Zone says. Asia equity markets maintained the positive momentum from their counterparts in U.S., where the Dow Jones Industrial Average outperformed on strong earnings and the Nasdaq Comp closed over 6,000 for the first time ever. ASX 200, plus 0.8%, gained on return from holiday, while Nikkei 225, plus 1.1%, benefited after the JPY weakened against its major counterparts. The Hang Seng, plus 0.3%, and Shanghai Comp, plus 0.2%, also conformed to the upside after the POC continued its liquidity injections. Finally, 10 years JGBs were lower with demand dampened amid the broad-based heightened risk appetite and as the BOJ kick-started its two-day policy meeting in which the bank is widely expected to remain on hold, while there was also notable underperformance observed in the super long end. BOC injected CNY 40 billion in 7-day reverse repos, CNY 20 billion in 14-day reverse repos and CNY 20 billion in 28-day reverse repos. Top Asian news. China's homemade aircraft carrier is second in Zeiss fleet. China Merchants seeks to overtake UBS in Asia with offshore push. China market strains worsen as AAA-rated bank scraps bond sale. ICRA sees FY18 foreign flows into Indian debt capped at $510 billion. China Eastern said in cargo stake sale talks with private firms. Huarong investment risks in spotlight after Glaucus report. Hyundai Motor counts on SUV, Genesis brands to revive profits. Korean peninsula on brink of war provoked from outside, Russia. European bourses failed to find any firm direction with equities trading somewhat mixed yet again. Earning updates are yet again at the forefront of investors' minds, with Credit Suisse outperforming in the SMI this morning after announcing profit rose above analyst estimates. Additionally, the Swiss bank noted that they will raise $4 billion in rights issues. Elsewhere, luxury names have been lifted after Kering stated that their organic growth were significantly ahead of expectations. Credit markets have found some support following yesterday's risk sentiment as the bund has seen a slow grind higher since the cash open, benefiting from month-end extension buying needs. Top European news. Santander's Brazil patience pays off as rebound lifts profit. Kering shares surge after Gucci's strongest growth in 20 years. Standard Chartered profit soars as bank overhaul gains traction. Daimler raises earnings forecast as spending pressure mounts. HSBC, RBS Saudi Ventures in talks to form $78 billion lender. BHP considers U.S. shale asset sale after activist call. Handelsbanken's capital supremacy fails to charm shareholders. Telia sees low Uzbek fine of $1 billion as sales top views. SEB sees Riksbank move after shocks Sweden manufacturing data. De Benedetti bets on media as Italy business clans look to sell. In currencies, the Bloomberg Dollar Spot Index increased 0.2%, climbing for a second day after a 0.5% drop on Monday. The yen slipped 0.1% to 111.24 per dollar, after dropping 1.2% on Tuesday. The euro lost 0.2% to $1.0903, after 4 straight days of gains. The early price action this morning has been in the euro, as the market has faded the story out late yesterday that the ECB are considering signaling it weakening their monetary policy stance in the wake of the Macron first-round victory at the weekend. This sounds premature to say the least, and alongside this, we have seen Draghi and co curbing some of the hawkish sentiment in response to their last meeting. The recovery EU-wide is a little better than fragile, but as the Fed have been struggling to do in their communication to the market, the ECB now face a similar task. So the 1.0950 test was inevitable given the headline-driven market, but euro to US dollar has since tempered this with a move back to 1.0900, while euro to pound sterling, traditionally bid into month-end, is also restrained through 0.8500. But largely down to cable resilience ahead of 1.2750, but now seemingly 1.2800, 1.2805 the low this morning. For euro to US dollar, 1.085030 looks strong in the meantime. US dollar to Japanese yen has also slipped back a little, and as we noted yesterday, sellers aplenty in the 111.00-112.00 area. We suspect a large chunk of the upside is down to the hopes and expectations of credible tax plans to be outlined in an announcement later today, so the risk here is that the market is, again, disappointed. Euro to Japanese yen has also relented given the above move, and after failing to touch on 122.00, we are back in the lower 121.00s. In commodities, gold struggled with reclaiming $1,270 yesterday, and we have since slipped back into the mid-1260s as the recovery in the USD index allied with a modest recovery in risk assets put further pressure on precious metals. Silver has also given up ground, and has dipped into the USD 17.50s. Oil prices back in focus after we slipped back under $50 in WTI, resuming its decline and losing 0.2% to $49.45 per barrel, after halting a 6-day sell-off on Tuesday. OPEC talks now key as oil bulls need further encouragement on an extension to the output cuts. The major producers all seem broadly open to the idea, most of all Saudi Arabia as ongoing comments suggest. Kia report today with speculation inventory will contract. Base metals all following the risk mood, with ranges tied ahead of Trump announcement later today. Copper buoyed but struggles at $2.60. It's a very quiet day ahead in terms of data. Over in Europe, French consumer confidence for April is the only number of note and is expected to be unchanged at 100, and there's nothing of note to watch in the U.S. However, earnings season continues with Procter & Gamble and Boeing due to report today among other names. Away from data, we will see UK PM Theresa May host EC President Juncker and EU's Brexit negotiator Michel Barnier today. U.S. event calendar. DB's Jim Reid concludes the overnight trap. So on day 97 of his presidency, today is all about Mr. Trump's tax plans, of which the eventual success, or lack of it, will likely define the economic landscape of his administration. The Wall Street Journal last night reaffirmed that Mr. Trump wants to slash corporate tax, including on pass-through businesses. He is also planning a tax break for child care expenses. There was also talk of a territorial tax for companies where they would pay little or no tax on future foreign earnings. Bloomberg also reported that a repatriation tax of 10% is planned on the estimated $2.6 trillion of stockpiled offshore earnings. Anyway, whatever we hear today, it will still have to go through legislative approval, and there will a lot of talk about how tough that will be if it's not revenue neutral. Staying with U.S. politics, there were signs yesterday that a U.S. government shutdown may end up being averted as President Trump showed signs of easing up on his demands for the immediate funding of the border wall. So far, the spending plan needed to keep agencies running till September has been kept quiet ahead of this Friday's deadline, but Trump's willingness to push back funding the wall to later this year could be a sign that he would be ready to sign the spending bill. Ahead of the big day in Washington, sentiment across global markets remained positive yesterday following the relief rally on Monday. European equities ticked up on the day, stocks plus 0.2%, while the Eurozone banks index gained by plus 0.6%. The DAX and CAC posted small gains of plus 0.1% and plus 0.2%. U.S. equity markets maintained momentum with the S&P gaining plus 0.6%. led by materials, plus 1.4%, and financials, plus 1.2%. Strong blue-chip earnings helping. The Nasdaq also hit a new all-time high, breaking the 6,000 mark for the first time after gaining plus 0.7% on the day. Interestingly, this was 17 years after first hitting 5,000, although without checking one wonders how many constituents were in the index back then that are still there today. We note that having taken 17 years to fill in this last 1,000-point gap, it only took 49 days to move from 4,000 to 5,000 back in 2000. Another stat is that the index is now up around 4.7 times from its lows in March 2009. Impressive, and all these stats are a reminder that timing is everything in investing. Elsewhere, risk on continued in credit. In Europe, we saw main and crossover spread tighten by 2 bps and 8 bps respectively, while senior and sub-financial spreads tightened by 5 bps and 11 bps on the day. Over in the US, we saw similar moves tighter as CDX and high tightened by 2 bps and 7 bps respectively. We saw a broad-based sell-off in government bond markets with yields rising across all maturities for US Treasuries, 2Y, plus 4 bps, 10Y, plus 6 bps, and bonds, 2Y, plus 2 bps, 10Y, plus 5 bps. Yields for 10Y OATs and BTPs yields also rose on the day by plus 7 bps and plus 9 bps respectively, with the 10Y OAT bond spread widening by plus 2 bps. In currency markets, we saw the dollar, minus 0.3%, weaken for the second day in a row, while the euro gained plus 1.0%. Sterling also gained plus 0.5% to reach its highest level this year. Moves over in commodity markets were fairly muted at both ends of the risk spectrum, with WTI and gold mostly flat. The Asian session is also relatively quiet, with the positive mood of the last few days continuing. The Nikkei is 0.7% higher as the BOJ start their two-day meeting, the Hang Seng plus 0.6% and the Shanghai Composite plus 0.35%. Gold, the dollar, oil and treasuries haven't moved much in the overnight session. Looking now at some of the data out yesterday. In Europe, the ECB Q1 bank lending survey was broadly positive as credit standards loosened across all three major categories. Loans to enterprises dipped back into easing territory, minus 2%, after having ticked up by plus 5% in Q4 2016. The net easing was roughly in line with the expected change in standards as reported in the previous survey, and banks now expect a net tightening of lending standards for enterprises in Q2, 2%. Standards for consumer credit and lending to households also loosened in Q1, minus 7% and minus 5% respectively. Despite loose lending conditions, credit demand growth from enterprises is slowing down. Net 6% of banks reported an increase in loan demand from enterprises in Q1, but this was well below the 11% that expected an increase, as reported in the previous survey, and also less than the 18% reporting an increase in loan demand in Q4 2016. Banks, however, expect net loan demand from enterprises to accelerate in Q2 2017, 12%. Elsewhere in Europe, we also got French manufacturing confidence numbers for April that rose more than expected, 108 versus 105 expected, 104 previous, while business confidence was flat on the month, 104, as expected. In the UK, the PSNB numbers, including banks, for March were reported well above expectations at £4.4 billion, versus £1.5 billion expected. Over in the US, we saw a large number of housing market indicators which were mostly positive. The FHFA House Price Index rose by plus 0.8% MOM in February, versus 0.4% expected, while new home sales unexpectedly rose to 621K, versus 584K expected, 592K previous. In terms of softer data, the Consumer Board Consumer Confidence Indicator for April fell more than expected to 120.3, versus 122.5 expected, 125.6 previous. The Richmond Fed Manufacturing Survey also fell on the month, but less so than expected, 20 versus 16 expected, 22 previous. It's a very quiet day ahead in terms of data. Over in Europe, French consumer confidence for April is the only number of note and is expected to be unchanged at 100, and there's nothing of note to watch in the US. However, earnings season continues with Procter & Gamble and Boeing due to report today among other names. Away from data, we will see UK PM Theresa May host EC President Juncker and EU's Brexit negotiator Michel Barnier today.
That's the news. Join us here every day. Be sure to subscribe and click the bell. See you next time.
This is TBNN.